Welcome back to Market Pulse. Today we're joined by Joost Burgerhout, Head of Financial Products at Marex. We'll be discussing structured products, investor behaviour, and how the macro backdrop is shaping demand and product design. We'll also look at innovation, technology, and what's next for the market. Joost, for those who don't know, in the simplest terms, what are structured products and who typically uses them?
So structured products are a combination of traditional asset classes and derivatives, often used by private banks, wealth managers, financial advisors, as well as institutional investors like hedge funds, asset managers, and large distribution retail networks. Basically, they provide a customized payoff to suit the risk and return mechanics that investors are looking for, providing access to different asset classes as well as fully customizable payoff in terms of maturity, protection, return elements, as well as underlyings.
And which structured products, regions, or themes are currently gaining the most traction?
So we still see in terms of product types that the autocallables remain king. So yield enhancement products, people looking for income in their portfolios, clearly form the biggest part of our business. We see in terms of thematics focus on AI-linked stocks. If you analyze the demand we're seeing from clients in terms of pricing and in terms of trading, clearly we see most demand on these types of stocks, whilst at the same time having the more defensive portfolios investing in index-linked products.
Mhm.
Where we have a lot of traction and a lot of demand is on the innovative products. So crypto-linked structured notes, and more recently a note linked to prediction markets, clearly attract a lot of attention and interest from clients, and I expect that to continue as well. In terms of regions, we've seen tremendous growth in Asia. Asia tends to be a market that trades shorter term products. And with equity markets continuing to rise, those products roll over and over and over. And that's clearly a positive for clients' portfolios over there. And we've seen a very strong growth in the US. The US market persistently up sort of 20-30% year over year. And that seems to be continuing in 2026 as well.
And what are you seeing in terms of investor demand right now? Are clients still becoming more defensive or still focused on yield and structures?
We see a combination. The yield enhancement category remains king. Investors are keen to receive yield in their portfolios. Like we see dividend payments on equities. People like yields on structured products. So coupon paying instruments remain king. But as we see a higher volatility in the markets being at record highs, we also see investors being more cautious and taking a more defensive approach on the downside. Meaning they go for lower barriers and maybe slightly lower coupons to have a bit more protection in the portfolio should markets sell off.
And Joost, how are interest rates and volatility affecting how structured products are designed and priced?
So interest rates and volatility are the most important components in structured products. So we come from a rates environment of pretty much zero for 15 years after the global financial crisis, in which clearly the pickup by selling volatility in these products generated an interesting yield. At the same time, this meant that products like capital protected products were virtually impossible to create. As we've seen rates coming back to more normalized levels, we've seen a slow shift back into capital protected products, whilst at the same time we've seen a period of persistent high volatility, which obviously leads to higher coupons being able to be generated on these notes, or investors taking a slightly more cautious approach and being able to price in a higher protection on the products they trade.
And Joost, are you seeing AI being used in structured products today? And where is it making the biggest difference?
Yes, so AI, the big buzzword of 2025 and 2026. Two elements. One, as an asset class, so we see a lot of demand for AI-linked stocks, the NVIDIAs, the Googles, the Metas, and so on in clients' portfolios. And as a tool, we see more and more use of it on the pricing and trading side, having sharper pricing, better market observation, leading to better risk management. On the client analytics side, being able to analyze client portfolios and provide them better propositions suited to their risk appetites. On the documentation side, providing and generating automated docs in a more efficient way. Um, and on the marketing side, we see the generation of product descriptions and videos being generated related to potentially every single product. And AI has really made it possible to make high quality output, provide better education to investors. And there's some other topics we're exploring, like client dashboards, a daily podcast where essentially clients can have a daily AI generated podcast with all the news headlines over the past 24 hours delivered directly into their inbox.
Great. And what do you see as the main drivers and opportunities for the market over the next year?
I'd say the main drivers are probably going to be the geopolitical and macro environment. What's happening with the current wars that are being fought? What's happening with rates? What are central banks doing? Are they going to lower? How fast are they going to lower? So that will clearly have a big impact. Um, Clearly, the structured products market is very correlated to equity markets. So, how resilient are equity markets going to be in this environment? If they continue to rise or sort of flattish, there'll be a continued growth of the structured products markets. But if we start seeing higher inflation, a drop in equity markets, clearly that will lead to a reduction or a shift in sentiment in structured products markets.
And Yoast, what makes Marex stand out in the structured product space?
Uh, I'd say we very much stand out by the fact that we're a different type of issuer. In a market that's traditionally dominated by banks, we are pretty much the only non-bank issuer. We're also a relatively new entrant to the market, thereby having the benefit of being able to deploy the latest technology. We don't face the issue of having sort of years and years of legacy technology around all systems, meaning we can move faster, we can focus on innovation more, we can bring new products to the market, and at the same time we have a very client-centric approach. If you see what's happening in the market is that the majority of issuers are reducing their sales forces and tend to only focus on the bigger accounts. We take the opposite approach. We've got a relatively large sales team, and therefore a service level to our clients, which I think goes beyond to what others are offering in this market. And at the same time, having a very strong culture within the team. So there really is this global team approach,
Yeah.
whereby trading, sales, structuring work together all as one team with the aim of providing the best possible service and the best possible outcome for our clients.
Yeah, definitely. All right. Thank you, Yoast. And thanks for everyone who's listened in. We'll be back next time with a cross Marex view on digital assets.
Thanks for having me, Venus.